Earlier this week on Tuesday, SoFi held a shareholder meeting, and in the days since that shareholder meeting, the stock has been declining. The latest short interest numbers show that millions of people are potentially betting against the stock, and yet we know one person who is not, who's buying despite all of this, and that's the CEO, Anthony Noto. And in this video, we're going to be talking about the news for this week, so let's jump right in. Now, SoFi has had a mostly quiet week this week. We had the shareholder meeting, which was most uneventful on Tuesday, as well as some other relatively minor pieces of news, all things considered. Nothing massively earth-shattering this week. As with my previous video, I'm traveling, so I'm not at my normal setup. So any apologies for audio issues that you might encounter. If you're new to this series, however, at the end of each video, I recap the SoFi news that I saw over the past 5 days. So definitely subscribe to the channel and stay tuned for more updates. As always, I start off with the stock price action. This week, SoFi saw a decline over the past 5 days, falling below the $7 threshold, closing off the week at $6.91 before regaining some ground on Friday. Naturally, this is frustrating for many shareholders, myself included, and I've been seeing a ton of commentary on this online that many people are feeling discouraged and frankly a little worn down from the price action. To a certain degree, even as a long-term investor, I feel that as well, simply for the fact that it seems as though the rest of the market is slowly climbing higher, and also that the stock performance doesn't really correspond with the underlying fundamentals of the company. SoFi did report a great first quarter, and yet the stock is down 28% year to date. What am I doing about it? Well, I actually wasn't able to purchase any more shares today, but as early as Monday morning, I'm most likely going to be purchasing more shares. Anywhere under $7, I'm a buyer for sure, but really I've been buying as high as $10, $11 whenever we went up. Why seven particularly? Because my cost basis is around that $7 mark. And so I want to be averaging down on that cost basis. But like I mentioned, I've been buying SoFi much higher. So I'm not really too fussed about the price because I plan on holding this thing for a long time going forward. Now, going into some of the actual news pieces, in terms of the shareholder meeting on Tuesday, like I said, this was fairly uneventful from a shareholder news perspective. The recording is up on the investor relations page. It was like a 17-minute meeting. There was only two questions asked. All the answers were very formal. They lacked clear clarity. I mean, the answers were probably prepared ahead of time, if not pre-recorded altogether. And on this point, I think a lot of retail investors, many of us on the SoFi Weekly, and people who covered the company in granular detail, we all wish we could get more information from management just to sink our teeth in. Now, this is obviously hard because management is measured by what they choose to disclose, but there's so much left to the imagination once you dive a few layers deeper into their financials and the thought process behind some of their business decisions, their product roadmap, and just their plans going forward on how they plan to expand. This might be asking for too much, but I think there is a middle ground here. Many retail investors, such as myself, are left grasping at straws and reading between the lines for some added clarity. In the past, this has also served us well, right? Because by reading between the lines, first of all, professional analysts don't do this. They totally discount what management is saying. They assign $0 value to the execution of the company. But with us, especially in the SoFi Weekly, because we read between the lines, we pick up on some of the breadcrumbs that management drops on these earnings calls, and those have come to fruition. Management has essentially shown us that they can execute consistently. And this is also why I'm looking for more information. Now, on Tuesday, also, a press release did come out that SoFi strengthened their lending capabilities with $350 million in personal loan securitizations placed with PGIM, which is a prudential financial company. With regards to this press release, the CEO, Anthony Noto, was quoted saying, quote, "We've continued to see healthy demand for our personal loan sales, providing us access to new forms of capital as SoFi helps more members get their money right." And obviously, this is good, right? The fact that they're turning over their book. We've talked about this in the past, and they've done other securitizations over the past 6 months. This press release also highlights that to date, SoFi has sold over $15 billion and securitized over $14.5 billion of their personal loan portfolio collateral, underscoring the high quality of the portfolio. Moving on down the news, on Thursday, a Form 4 came in with the CEO, Anthony Noto, who had bought another 28,900 shares at a $6.91 price average, which equates to around $200,000 worth of SoFi stock. Anthony Noto does own over 8 million shares of SoFi. His last purchase was on May 6th, so a couple of weeks ago, of a similar amount. He bought 28,775 shares. It seems as though he's a consistent buyer under $7, as the vast majority of his purchases over the past 3 years have been under $7 a share. A lot of them actually have been in the $4, $5 range, so he's bought fairly low. Now, I'm sure many people will argue this both ways, depending on which side of SoFi that they sit on. On one hand, they might argue that Anthony Noto is just trying to prop up the stock or to fuel a rally in the retail investor crowd. But the reality is that he's been buying up consistently for a long time, and the vast majority of his personal net worth is tied up in SoFi shares. Of course, this is a positive since what you want from the management team is you want them to have skin in the game. You want them to have their own goals aligned with investor goals. So I took this obviously as it being a positive. I've mentioned this in previous videos before of basically Anthony Noto believing in the stock so much that it's undervalued relative to where it should be, and himself putting even more of his personal capital on the line by investing in the stock, despite the vast majority of his net worth already being in SoFi, despite his performance stock units that he's granted from the company based on execution in his role as a CEO. And finally, the last major piece of news for this week is earlier today, we got updated short interest numbers, which were released as of the May 15th filing. As of May 15th, the short interest results remain relatively unchanged at 179 million shares sold short. This is slightly lower than 182 million, which was reported on April the 30th, at 17.27% short interest currently on SoFi. Now, we're still operating at a very high level of short interest, right? We were as high as, I think, 21% a couple of months ago. A year ago, we were as low as 11%. And so if you plot that out on a range, we're still at the top end of that range with regards to a short interest perspective over the past 12 months. What we don't know is we don't know the reasons why the short interest is happening. We don't know how long this short interest will persist. We've also seen institutional buying, and what we don't know is how much of that institutional buying is as a hedge for these shorts, or maybe it's the other way around. Maybe the shorts are a hedge for the buying, right? So we don't know how much of this is, delta hedging for that matter, and we certainly don't know how long the short interest will last. We're just simply monitoring the situation and saying that the short interest has risen and it remains persistently high. Now, one thing I will say here is that SoFi continues to execute as an underlying business. There's no reason we should have this high level of short interest, and it makes less and less and less sense every single quarterly report because every single quarterly report, SoFi proves that they are rapidly growing. They prove that they are sustainably profitable and they will be in the future, and they guide towards even higher returns than they previously reported. And so, in that context, the short interest doesn't make sense because this is a steadily growing company. And of course, my stance is that given enough time, of course, the short interest will fall. We don't know whether it's going to fall violently or whether it's just gradually going to wean off. It will fall. Anyways, those are the main pieces of news for this week. I'm sorry this is a relatively rushed video, maybe. Definitely a lower quality video, but like I said, I'm just in transit. And so I'm wanting to make these videos quick and maintain that consistency of reporting SoFi news every week. I hope you enjoyed this video. Next week might still be a little crazy for me, but I should be back to normal the week after that. Subscribe if you have not already, and I will see you in the next video. Thank you so much.